The stocks and shares ISA, in my opinion, is one of the best ways an average person on an average wage can grow considerable wealth during their lifetime. Now, the thing is, a lot of people are still unaware that the stocks and shares ISA exists. And even when they know about it, they don't know enough and they have a few misconceptions. So in this video, I'm going to go through everything you need to know about having a stocks and shares ISA. Now, there are many different options when it comes to opening a stocks and shares ISA. In this video, I'm going to focus on Trading 212 as I think it's most accessible to the average person. So if you would like to set yourself up with a stocks and shares ISA today and receive a free fractional share worth up to £100, all you have to do is to follow the link in the description box down below. Alternatively, if you've already signed up to Trading 212 before seeing this video and it's been less than 10 days, all you have to do is to press the 3 horizontal line menu over here. Scroll all the way down until you see the section use promo code, and in this section just enter the code JUBAIR and you should receive a free fractional share. So what exactly is a stocks and shares ISA? Some of you have already heard of the term ISA. We're going to go through that quickly now. So most of you have heard of ISAs. This stands for individual savings account, and put it very simply, anything within a stocks and shares ISA, no matter how large it grows, is tax-free, hopefully for the rest of your life until the government makes some changes. Let's all hope they don't do that. So if you've been around banking for a long time, you may have heard of the cash ISA, which is the most popular type of ISA. This is where you can actually put your money usually in a bank and you can actually save risk-free, and any gain you make is exempt from you paying taxes later along in your life. If you didn't know already, for a basic rate taxpayer, if you make more than £1,000 in interest, any excess is liable for you to be paying your own taxes via a self-assessment, which could actually add extra costs. Now, it's very important to note that the ISA is not unlimited. You can only deposit a maximum of £20,000 per tax year, but we'll touch on that in a bit again. Now, like I said, I think the stocks and shares ISA is one of the best ways that the average person can grow long-term wealth. And this is exactly what I'm going to be explaining in this video. So unlike a cash ISA, a stocks and shares ISA allows you to invest into stocks and shares just like the name suggests. But remember, within an ISA, an individual savings account, everything remains tax-free upon withdrawal, because no matter how large it grows, right now, my portfolio is worth over £120,000. But even if it was £1.2 million, I am not paying taxes along the way. And I'm going to show you what kind of taxes you can avoid. Now, the first tax that you can avoid is capital gains tax. This is when you buy some shares and then you sell them later on and you realize a profit. In this current tax year, as I'm speaking now, if you make more than £3,000 in capital gains, if you realize more than £3,000 in profit outside of your ISA, you will be having to pay some capital gains tax. Now, I'm quickly going to teleport over to my Trading 212 Invest account. Sorry to confuse you guys, but I've shown you 3 already. This is the Trading 212 Invest account. As you can see, I have a bit of money here. So this is outside of my ISA. It's not tax protected. So I've made over £3,000 in capital gains. So I am going to have to pay some taxes on that because I'm not investing within a stocks and shares ISA. So the next tax that you can avoid within a stocks and shares ISA is actually dividends tax. Now, if you didn't know, if you invest outside of an ISA, for example, the Trading 212 Invest account, in this current tax year, if you receive more than £500 in dividends, anything above that, you will be having to pay dividends tax based on your tax circumstances. Now, within the stocks and shares ISA, the other tax that you can avoid is interest on cash. But if you are investing all into stocks and shares, you don't actually have to worry about that. You will also notice something very important about the stocks and shares ISA, and that every tax year, which runs from April the 6th of the current tax year to the next year's April the 5th, you'll be able to deposit a maximum of £20,000 into your stocks and shares ISA. However, this limit is actually shared between your different types of ISAs. So if you have a cash ISA or a lifetime ISA that you've opened in the same tax year and you've deposited into that, Trading 212 will have no idea of tracking that, so it's up to you to do that. As you can see currently, Trading 212 thinks I have used none of my ISA allowance, but actually I have maxed it out with another broker, but Trading 212 won't know that, so it's very important that you keep track of this. Now, one of the most common misconceptions when it comes to the stocks and shares ISA allowance is that if you've put £20,000 into your stocks and shares ISA and then you receive a dividend or you receive any growth, is that then going to affect your stocks and shares ISA allowance? The answer is pretty simple. Absolutely not. This is just a deposit allowance. I wish they actually changed the wording on this because it sounds like you can only make £20,000 per tax year. That's absolutely not the case. As you can see, my portfolio is worth over £100,000. In total, I have deposited £40,000 into my Trading 212 Stocks and Shares ISA. I've also done a couple of transfers, and by no means have I deposited £120,000. So yeah, you can make more than £20,000 per tax year. This includes money from dividends and capital gains. And don't worry, if you have maxed out your ISA, you've received dividends or any capital gains or even interest, that is not going to count towards your allowance, as this is a deposit allowance. Now, the benefits of having a Stocks and Shares ISA is that instead of relying on growing your money through interest on cash, which is typically extremely low, and stocks and shares over the long term have always beaten out cash in any meaningful time period. Now, this allows you to build your wealth just like the rich are building, which is through stocks and shares. Now, it's very important to note that when you are investing into stocks and shares, your capital is at risk. The value of your investments can go up or down. You can even lose everything. So compared to a cash ISA, the stocks and shares ISA does have a higher element of risk. So within a stocks and shares ISA, you can invest into companies like Nvidia, like Alphabet, which is basically Google, Apple, Tesla, the list goes on. Or you can invest into funds, which basically give you more diversification. They do reduce the risk a little bit, but funds themselves do carry risks. So don't think just because it's a fund that you won't lose your money. It's very possible to do that. It's completely up to you though how you invest. So you can choose funds, you can choose stocks, you can even invest into commodities such as gold and natural gas. The list really does go on. This video is not aimed at how you can generate your wealth, but rather what the stocks and shares ISA really is. Now, going back to the ISA allowance on Trading 212, it has a handy menu where it will explain everything for you. Now, one thing to note about the Trading 212 ISA is that it is now flexible, which is a really good addition. So historically, if you've maxed out your ISA and then you withdraw that money and then you try to put it back in, any new deposits would have affected your ISA allowance. So if you put in 20k, it goes to 40k and then you take 20k out and then you realize you just want it back in your ISA, that 20k, you wouldn't have been previously allowed to do that. But now with a flexible ISA, you can take out as much as you want from your ISA, and as long as you return it back in the same tax year, nothing is affected, no harm done there. Now, on the subject of ISA allowance, you can actually transfer from your invest account over to your Trading 212 Stocks ISA. So this is something that I have done quite regularly. So all you have to do is to press the 3 horizontal line menu, and then you go into the Manage Funds menu, and at the bottom it says Move Funds. So what you can do is to move money from your invest account over to your Stocks and Shares ISA. It makes it really easy. You don't have to do a bank transfer. However, when it hits your Stocks and Shares ISA, this will be counting as a deposit. So it's going to affect your Trading 212 ISA allowance. It's very important to know that if you have a stocks and shares ISA somewhere else, that you shouldn't just withdraw into your bank and then try to deposit within your Trading 212 stocks and shares ISA, as this will affect your allowance. So in the menu section, there is portfolio transfers. As you can see, I have done a previous transfer from Invest Engine. I've transferred my ISA from there. So remember, if you want to transfer your ISA, you're more than welcome to. You can transfer your current tax year's ISA or your previous tax year's ISAs. However, you have to do it through this means, and Trading 212 and your old broker will sort it out and your ISA allowance won't be affected. Now, I personally get so many questions on the stocks and shares ISA. It seems like there is a lot of confusion. So I'm going to go through a couple of questions just to make it a bit easier on you guys. One of the questions I've received recently is that can you withdraw penalty free from your stocks and shares ISA if you wanted to actually put down a housing deposit? And absolutely, as long as you have cash within your stocks and shares ISA, you can withdraw penalty free. There's also no taxes that you have to pay upon withdrawing. There's no national insurance, there's no student loans that you have to pay. So this makes the stocks and shares ISA a great place to generate long-term wealth that you can later use as income. The famous 4% rule states that if you can grow your portfolio over the long term by around 10% a year, you can take out around 3 to 4% without actually draining your portfolio. So if you have a stocks and shares ISA with a value of around £1 million, this is just a rule of thumb, but you can take out around £30,000 to £40,000 per year as income, provided that the markets are going your way. It's not always a guarantee. Now, during this video, I've mentioned a lot of times that the stocks and shares ISA is completely tax-free, but that's not completely correct. And I'll show you 2 instances where you actually will have to pay taxes. Now, the stocks and shares ISA itself can't make you avoid. Now, the first one is buying foreign stocks, for example, in Nvidia. Now, the first tax that you can't avoid is when you buy foreign stocks, for example, American stocks, example again, Alphabet. Now, when this company pays out dividends, you will be paying a tax automatically. This is not a tax you have to pay later on because you were paid dividends from a foreign country. This in particular is called the withholding tax, and the US applies a 30% tax. However, the UK and the US have a tax treaty, so if you sign your W-8 Ben form, then you will get a lower rate of withholding tax, which is 15%. But still, you can't avoid that tax, unfortunately. Now, even if you don't want to invest into foreign stocks and you want to invest here in the UK, for example, when you buy Tesco or any company based in the UK, there's a pesky tax that you can't avoid, and this is called the stamp duty reserve tax. Currently, this is 0.5%, which is actually pretty high when you buy and when you sell these shares. So these can really add up, and there's no avoiding it within a stocks and shares ISA. Now, on the subject of things that you can't avoid, when you buy in a foreign currency within a stocks and shares ISA, you will always pay a foreign exchange fee when you buy and when you sell. That is currently at 0.15%. Within a stocks and shares ISA, you are not allowed to hold cash that isn't pounds. So there's always going to be the foreign exchange fee when you buy and when you sell, as opposed to the trading to invest account, where you can hold multiple different currencies. And lastly, please realize that when you're investing into a fund or an ETF, that the fund will have its own fees that Trading 212 has no control over. Now, usually these fees are taken from the value of the fund. For example, with the Vanguard S&P 500, it's 0.07%. This percentage is taken out from the value of the fund as a yearly amount, so you actually don't have to worry about paying anything from the balance of your Trading 212 stocks and shares ISA. So make sure to check out some of my other videos, and I'll see you in the next video.